Good day, traders. Welcome back to Fides trading channel, and we are back again with another weekly flows analysis video. Today is Sunday, the 29th of June 2025, and we will be looking ahead until the 4th of July 2025. In each week, I break down the markets using a top-down approach, starting with the higher time frame to map out the bigger picture. By analyzing key zones, trend structures, and institutional behavior on the weekly and daily charts, I uncover the dominant bias and potential market flows for the days ahead. This helps me filter out the noise, anticipate major moves, and stay aligned with where the smart money may be positioned. Tune in as I decode the charts and lay the groundwork for the trading week ahead with clarity and precision. Starting with the gold markets, we are on the monthly time frame, and what we can observe is per the monthly as well as the weekly time frame, we are very much bullish. We're comfortably trading above the 50 SMA, and we're very much in that overextended territory on the RSI. Per the weekly time frame, we're also trading above the 50 SMA, but we're showing signs of retracement as we saw last week as well as the week before with the bearish trend that has been coming out of gold. So with that, markets are trading above the 55 RSI line, but it is showing signs of bearish momentum currently at play. On the daily time frame, we can see that from last week we had a massive bearish shift in the market, and market kept dropping with gold. We actually broke below the 3350 as well as the 3300 support level, and markets are continuing this bearish trend as we step into the new week. We can also observe that price has broken below the 50 SMA as of Friday, although we are still very much trading within that broad range consolidation with support approximately at 3,250, potentially 3,200, with resistance at 3,400, 3,450. So price has shifted bearish with gold, and we are looking at short positions. However, we do need to be cognizant of the support level that we are about to approach. We can see that last week, looking at the 4-hour chart, that price pretty much continued the bearish trend. We did have some pretty decent retracements which tested the 3,350 break and retest zone, which is a perfect discount level to get in at. The reason why it was so sweet was that on that Thursday, price was trading very close to the 50 SMA, and we can also observe that with the bearish momentum we have coming out of the RSI, that price actually tapped within that sweet spot zone before continuing its bearish impulse move to the downside. So the market for gold is providing some shorting opportunities. It's just a matter of waiting for the retracements to play out and then executing at beautiful price action levels. As we can see right now, price is on an impulse move to the downside. I do expect further downside positions, and I'm looking at this break and retest level here at 3300 as a potential point discount zone. We also have the added confluence of the bearish trend line that we can see that's been validated by the three touches as well. So we'll be waiting price to retrace, end up somewhere in this zone, and then taking a short position and riding that wave down to 3,250. As it stands, price is currently at 3,274 with futures price at 3,287. So there's about a 14-point difference right there, a 13-point difference right there. Moving on to US tech, we're starting on the monthly time frame, and what we can observe is that price is still very much bullish. We can see a strong push to the upside, and within this month of June, we have still been pushing very, very bullish, and we have a nice full-bodied bullish candle there. We're comfortably trading above the 50 SMA, and we're approaching the overextended territory on the RSI, but trend remains super bullish. On the weekly time frame, we can see that this last week we had a strong bullish push to the upside. Price comfortably trading above the 50 SMA, and we're very much in the bullish region of the RSI above 55. So looking at longer positions. On the daily time frame, price was in a bit of a consolidation leading into the week, But on the Monday, with the strong bullish close, this bullish momentum continued into the remainder of the week, with investors a lot more comfortable with the risk-on mentality and actually removing gold positions and increasing their position within the indices. We can see here that we did tap into the sweet spot region very close. Here we were close to the 50 SMA, and we tapped into the sweet spot region on Thursday the 19th. And then after that, we had some divergence in the RSI, which allowed us to capitalize on the long position to the upside. On the 4-hour chart, we can see the strength of this bullish impulse move that we've just had during this past week. Price trading far above the 50 SMA at the moment, and we are in the overextended territory on the RSI, currently at about 76. So I do expect a retracement to play out. We do see a bit of a weak rejection to the downside here at the close, but I would like to see how price opens, and I could potentially see price retracing towards the 22,300 level, or potentially 22,180 level, where we could potentially see a bounce or pivot there back into the bullish territory. And I'll be looking at those two zones as potential discount zones to capitalize on. So we could be seeing a bounce right there, or we could see a bounce further below. So that's very much analysis on Nas100. Moving on to US30. US30 has also been very bullish this week. We can see that current month candle is super bullish. We have a strong full-bodied candle. Price trading above the 55 line after tapping into the sweet spot, and is comfortably trading above the 50 SMA. On the weekly time frame, we've broken above the 50 SMA as of this past week with the strong bullish weekly close right there, and we can see that price has broken above the 55 zone on the RSI, which all but confirms the bullish momentum and the confluences that we are seeing here. Per the daily time frame, we can see that this past week was very strong for US30, and we are nearly tapping to that overextended territory on the RSI. Price comfortably trading above the 50 SMA, as well as seeing some strong bullish structure that is still firmly intact as the price makes its impulse move to the top side. On the 4-hour time frame, we are on an impulse move to the top side. We've broken above the 50 SMA. We've broken all the resistance levels that were previously here, such as the one at 42,900. And price is trading the overextended territory on the RSI, currently sitting at about 85. So it is clear that a retracement is imminent, and I will not be trading this impulse move until a retracement takes place. Where could I be potentially looking for a retracement? Well, I'd like to see price come back to the 43,150 and then bounce to the upside. If price does fall lower, I would expect it to land around 42,930 before we see a bounce. So that's very much your indices and gold. Just taking a look at the VIX index, we can see that last week we closed at 16.33. So it is clearly below 20, and it is clear that investors are risk on, comfortable taking investments in indices while removing their long positions from gold. Taking a look at the indexes, we can see that this past week that the dollar has resumed its bearish trend to the downside, and we're actually creating new lows at the moment with the dollar. So dollar weakness definitely afoot. We're trading below the 50 SMA line, and we're very much in the bearish territory of the RSI. The euro index continues to get stronger off the back of the dollar weakness, and we can see that price is pushing to the upside. Euro is gaining some strength. We are trading in the overextended territory on the RSI here on the 4-hour chart, so just be cognizant of that. We could potentially see a retracement soon towards that 50 SMA line, potentially around the 116.01 level. The yen also saw some strength this past week at the opening, had a strong push to the upside, and this bullish momentum continued all the way throughout the week. And we are back within this consolidation zone above the 68.94 level. Price just hovering in this vicinity. We can see we've tapped back into the 50 SMA, and we are just staying within this consolidation zone as per the 50 SMA and the RSI. Taking a look at Euro USD saw some strong bullish moves this past week, and I do expect that the bullish momentum will be continuing into the remainder of the week. We can also observe that Monday opened with a strong bullish candle at 3 p.m. and this set the precedent for the rest of the week. We've broken above the resistance at 1.16335, and we now have our support level at 1.159. Price is currently consolidating. We can see that Thursday, Friday was very much just a consolidation phase, but I do expect further upside potential after a retracement, though. We are trading very far above the 50 SMA, and we are tapping into that overextended region on the RSI, also observing some bearish some RSI divergence right there. So just be cognizant of that fact. Euro JPY continues to make some highs last week. We saw a bit of choppiness in this particular market, but price is still comfortably trading above the 50 SMA and very much showing bullish momentum per the RSI. Structurally, we can see the structural levels are still intact, and we have our higher low here at 168.1 as price pushes further to the upside. In terms of USD JPY, it was super choppy, and I didn't really do too much of an analysis on this pair because of that reason, but we will just leave it as it is. So in terms of fundamentals, for the week, they're going to be scattered, especially with the US being involved in the Iran-Israel conflict. We have to see if the truce actually holds coming into next week. So we could potentially be seeing massive spikes in the markets based on movements within that in that vein. That being said, we still have a strong fundamental week ahead with all currencies starting on Tuesday, I think it is. Let's actually just hop into the Forex Factory calendar. Okay, so taking a look at some headlines, we can see we have some Tuesday news. We have YEN news and USD news with JOLTS and PMI. And then on Thursday, we have NFP release because Friday is a public holiday. So just keep that in mind when you are looking at some trades this week. I also just want to cover some of the headlines that are coming out of TradingView. So taking a look at some headlines starting with FX Street, we can see that gold looks range bound near 3270. Gold extends losses as trade deal optimism continues to boost demands for riskier assets. Gold tanks as China deal and Middle East diplomacy spark media euphoria. So yeah, we can see that gold selling bias remains unabated amidst positive risk tone. We can see that the market is very much 50% bearish, 50% sideways. Sellers ignore US dollar weakness amidst Middle East tension easing. So it is clear that per these headlines that gold still has a very negative sentiment, and we will be continuing to look for shorts there. Just having a quick look at stocks. S&P 500 notches all-time highs despite rising inflation print. Yeah, we can just see stocks at record highs. US market hit new all-time highs. So it's very much riding off the coast of indices being as strong as they are right now and actually printing these new highs. But let's head back into the charts and actually just check out what they're saying per TradingView. I'm pretty sure it'll be about the same sentiment. Actually, yeah, it is going to be pretty much the same sentiment, but I do suggest that you just read up on the headlines and actually just gauge the bias coming out of these news outlets because it does impact ultimately the fundamentals. I like to do my fundamental reading prior to actually taking a look at my technicals. I think it just gives me a good bias as to how the market is positioned, and then just using technicals to work out where I could potentially find some entries. But that is it for this week. I hope you guys enjoyed that video. Please like and subscribe, and I will catch you in the next Fides Flow video. Happy hunting, traders. Catch you in the next one.